Like I've mentioned before, like, I was in Turkey in 2019, and I'm visiting all these Turkish companies, and one of the companies I visited it's the number one warehouse operator in Turkey. They've got about 13 million square feet of warehouse, 99% leased. The tenants are like IKEA, Amazon, Carrefour, very blue chip client base, 10-year leases, and the market cap was 20 million. And you could, on a bad day, sell the entire portfolio for $1 billion. Okay. There was $200 million of debt. Okay. So
you have $800 million.
I mean,
exactly.
basically, it's like, you're paying 20 million for 800 million of value. You're paying like 4 or 5 cents on the dollar. So, or 3 cents on the dollar in that case. I said, and so, like my Turkish friend who took me there, great value investor. I said, are they crooks? Like, he said, I've never heard anything untoward. They're high quality people. I said, I don't see this anywhere in the world.
Right.
Okay. I don't see this, like something worth hundreds of millions is trading for 20 million. Right. And I met the father and son who run it, and I can judge people pretty well. And I said, I don't think these guys are crooks. I think these guys are hardworking, smart guys. And they didn't understand the stock market very well. They didn't fully comprehend the amount of wealth they had from a market perspective. They had some, they just weren't savvy on markets and but they didn't care. They controlled the company. They didn't really care what the market was saying it's worth or whatever. That was irrelevant to them. And I spent an afternoon visiting the warehouses, with the son. We drove around and I told him, let's take me to the warehouses. I want to just see them, kick the tires, right? Extremely high quality places, very pristine and great areas. And because, Amazon and IKEA and these companies, they will not take, Mickey Mouse stuff. Right. And then there are a bunch of other businesses. They had the largest truck fleet in Turkey. They were the second or third largest freight train operator. Now they're number one. And just, a bunch of other businesses that they were doing. And I realized the way they enter businesses, that their model for capital allocation was really strong. They're basically not interested in anything where in a year or two, they don't get the money back. If they put money out and they don't get it back in a couple of years, they're not interested. So 40, 50% ROEs is kind of where they're at. And so I said, okay, we're going all in. And I own a third of the business now. I was shocked that I was able to buy it. Turkey is a crazy gambler's market. It went from 20 million to 140 million market cap in about 18 months. And it's still cheap. It's still not gotten to where the value is. But, we're watching paint dry.
What's the free cash flow in that business?
The free cash flow is pretty good. It has some noise in it because the interest rates keep moving around, and Turkey has a lot of noise with the exchange rate. But basically, I think their business on a steady state is in the 30, 40 million free cash flow.
So when you saw
their earnings exceeded the market cap.
So when you, so that's the question. So how did it get to 20? Were you intrigued by this because your friend called you and said, this stock keeps falling, you got to come here and check this out because now it's selling for an unbelievably low. What was your...
Actually, the funny thing is, he wasn't an investor, right? So I asked him, I said, why aren't you an investor? And I explained all the economics to him. And after we went through all the, seeing all the warehouses and all that, he bought the stock. So he wasn't an investor, then he became an investor, and it doubled and he sold it. Okay? So I said to him, wait a minute. What's going on here?
Yeah.
He said, Mohnish, you don't know Turkey. This is like a very volatile market, I'm getting double. I said, this is value gap.
Yeah, right.
So can I ask you a question? Why didn't you just, I imagine, was it possible to privatize them? Just go to them and say, what were the father and son doing that didn't allow you to even privatize the business and just say, I'm going to get my money back.
First of all, I'm not an activist investor.
Okay.
And secondly, I don't have control of the investment. And I would not want to do something to that business which they are not in favor of.
Well, okay. You mean in terms of taking all the shares?
So
okay.
I think the father and son are savvy, and I think they, most entrepreneurs, if you look at a company like Walmart, okay, the Walton family, they're not going to sell Walmart if someone offers 30% more or 50% more.
Yeah.
Okay, that's not the game they're in, right? So many times in Walmart's history, someone could have come and offered a 200% premium, and it would have been a great deal for the buyer. Okay. The family wouldn't have sold.
Right.
Because I think for them, there are other factors beyond just, because like Buffett says, if you're an owner of a business, you already have the wealth. Now, whether you monetize it and it's in dollars in your account, or whether it's in the warehouses that you own, it's apples to orange, So I think that it is not always a logical. So even if
I didn't mean it like that, I meant it was that an opportunity for you? I'm sure the family has 1,000 reasons why they didn't, but I meant for you.
My take was that the bedrock of value investing is that eventually the market is a weighing machine.
Yes.
So what Ben Graham said is, voting machine in the near term, weighing machine in the long term, and watch paint dry in the meanwhile. And I don't have a doubt that 5 years or 10 years from now, the Reysas in Turkey will get appropriately priced. It'll get appropriately priced. It just cannot not be appropriately priced. And if you think about it, it sat at a 20 million market cap for more than 10 years.
Wow.
Okay.
Oh, wow.
Okay. Now, it wasn't worth that much 10 years ago.
But now it has.
So what happened is that probably 10 years ago, the value was 40 million or 30 million, and it was sitting at 20 million. And the value grew. And these guys, the father and son, they do a very poor job of explaining the business to the street. There is no deck. Okay. There is no,
good for them.
There's no IR department. Okay. And I actually asked them, I said, listen, why don't you put out at least a simple investor deck? They said, why? They said, we are fine with the business. It's okay.
Good for them.
And actually they were a little surprised because they wanted to buy more of it, and they thought it never goes up in price. So they have the freedom to buy it whenever. And then suddenly it went up, and they were saying, oh, I wish I'd bought some more.
So, we talk about, it's funny you say 10 years. And, one of my examples all the time about stocks is the perception when we talk about Microsoft. So Microsoft was one of my first real true value plays in 2011 and 12. Because I remember hearing everybody telling me this company is dead. When 10 years before it was, this company's untouchable, nothing's going to hit it. So in that 10 years, the stock fell 80%, I think 78%. And the business got 5 times better.
Yeah.
Right. And it's these times that you sit there and go, when we look at Mexico, so we have some homes in Mexico where we rent out. And I went on vacation in Mexico. And I remember my lawyers in Ohio saying, you better not buy these houses. I'm like, why not? You're going to get kidnapped. You're going to get murdered. Things are going to happen. It's going to be like, and then my dad calls me, Paul, do you realize you can't own? Do you realize the cartel looks for people who buy houses in Mexico and they kidnap them? I'm like, oh, I didn't know that. He goes, yes, they do this. I'm like, okay, well, nice knowing you, Pops. But there's that mispriced judgment, like Turkey you have, is mispricing. And I look at these things and I'm surprised to hear you say it took, how long do you wait for these invest? Like for our house in Mexico, they generate cash flow every month. Somebody send me right now, Paul, what are they worth? I don't know. I know what the business is. I know what the business generates me per year. I invested $2.2 million. It generates $500,000 in profit on 2 houses. Sounds pretty good to me.
That's very good.
Right? But with no debt. But how long are you going to wait for? If you'd owned that stock, let's say 5 years before, even 10 years before, you thought it was worth 40, you bought it for 20, and you sat there and waited and waited. At year 5, are you going, what's going on here? Like, how are you approaching that?
So I think what I have found is with this particular company, I'm not even concerned so much about the value delta. what I find is, which is I find really amazing, is that the son is better than the father, and the son is 36 years old.
Mhm.
Oh wow.
So you're looking for
The father
future.
is about 62 or something. The father's really good too. I mean, I think that the two of them have a great yin yang. The father's very aggressive. The son has a bit of an accountant streak in him, so he kind of holds him back a little bit. And so the two of them actually work really well. And the other thing is that they have they don't realize this about themselves. They're exceptional capital allocators because I think the way they think about it is, like I'll give you an example. When we invested, they were not in the solar business. Okay, or if they were there, were very small. Some German guy came to them. Okay, this just to show you how they work, right? Some German guy came to them and said, "I'd like to lease the roofs of all your warehouses. When you lease your warehouse to IKEA, you never agree to lease the roof to them, so the roof is still available."
Yeah.
So the guy says, "What do you want to do with the roof?" He says, "Oh, I'm going to put solar panels on it." He says, "So they said, how does that business work?" So the German guy explained to him that Turkey had passed these net metering laws, the same as what we have in California, where basically the utility has to pay you for electricity you generate the same rate that they charge you. Okay, that's the net metering law. And so basically, if the electric rates go up, then what they pay you goes up as well. And what happens is in with solar panels, the electricity is generated at prime time, right? It's prime time is when it's daytime, so you're getting paid the prime time rate. And I had solar panels in my home in California. We stagger all our usage, right? So the dishwasher runs at night and the washer runs at night and the cars are getting charged at night. The rates are all low at that time, but I'm pumping to the grid when I'm at work at a high rate. And so actually for several years in California, I paid zero in utility bills. We run the AC, we run everything, it's zero because of that thing. So when they ran the numbers, they told the German guy, "We don't need to lease it to you." So they didn't know anything about the solar business. They took one of their warehouses, they found a contractor, put the solar on, saw the numbers, realized that Turkey has no fossil fuel, so they're importing everything every year, and those rates keep going up. But once you do the solar, your capex is done. There's no cost after that, but your revenue keeps going up. On a pure equity basis, they get all their money back in 4 years on those solar panels. It's incredible. And the panels...
So that's a failure for them because they want it back in 2 years.
Yeah. He went
this
for 4
sucks.
Exactly. First, he was not very interested. But then he said, let's go ahead and do it anyway because we can finance it. Once you put some financing, he's getting it back in 2 years.
Oh, yeah. He's getting his equity, yeah.
Yeah. And the thing is that the panels that were built 40 years ago are still running today.
Wow.
The ones that were built 40 years ago had a 30, 40-year life, but they're still running today. The ones that built today, they may go 60, 80, 100 years. We don't know yet, but they're a lot better. And so what I feel about this company is it's not so much the valuation gap. I just like the allocators. So out of the blue, the solar business came up. The solar business is probably worth 100, 200 million already and probably worth more in the future. So why not?
What do they do with their free cash? Are they paying out any dividends or anything? I mean, I know it's...
The dividends are minuscule. I think what they're looking at is their debt reduction, and they have a lot of growth on their rail business. So they own 3 rail stations. In Turkey, you cannot own the rail network. Rail network is owned by the government. But they own the rail cars, and they're not allowed to own the rail engine. So the train is run by the Turkish government, but they own the rail cars. So they have these deals with Toyota and whatnot. The trains are running. So they are pumping money into those businesses. So what I've realized with these guys is just they're smart allocators. They've got skin in the game. They're pretty straight. Let it rip. We don't, I mean, I've got the warehouses now, I got the solar business, and I'm going to Turkey in January, and we'll see what else I'm sure they might have created something new that I don't even know about.